Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is Friday, November 13, 2020. Since Jack's having a little problems with his internet speeds and connections, I'll go a little bit longer this morning. So as we are looking here at the overnight session, 51 points. If we look at the extreme level 4As, we can see, down to 34.28, which is also the base of some single prints that have been untested going back to November 4th. And then, at the high end, you're looking at 36.37. I think that to the upside, we're still likely to be challenged the first time we ever get back up near 36.06 half, and then potentially even down at 35.90, right around there would be another spot. Just that swing low from this, Monday, the 9th, dip and reversal. So that was a swing low on Monday. So looking really at the indexes here and the longer term picture, I'm gonna we'll do this. Hopefully this shows up all right for you. So what I think we're really likely to do is right now, this is our flash up, right? So this is obviously some issues with this whole bar here, right? Price got ahead of itself and has technically been rejected, but if you look at since then, right, all we've been doing is, hugging right around this area of the chart that's basically 3,500. We haven't been able to get back down there during the daytime or the bell-to-bell sessions, and we've just been consolidating basically, from that 3,500 up, and you could even call it 3,525, basically above that area. But what I think is going to happen, sometime in the not too distant future, we're going to end up printing between, 3,500 and 3,400 back in this area of the node, right? We're going to lose this shelf that's up here. But until that shelf gets lost, right, the bias and what you have to assume is that shelf's going to hold, and we're going to continue just to chop around this area until we actually see, a break, and then it's, you've got a little bit of resistance to chew through here from these 2 days before we could really in earnest, get into this area of the chart. So, and I don't think that's calling for a lot, we're day traders. I don't think that there's any trends that are going to be developing here. I don't think we're rocketing up off of this in the next 2 to 3 weeks. I could be wrong. The price action will tell us. And so this is the first area I've been looking. I've been sharing with my equity profile members that I'm really watching this market now in 150 point subsections, right? So I'm watching it in 100 point increments with a subset of 50. So now that we've kind of chewed through all that, we'll go through and we'll look at the profile. So basically, we're just still traipsing around the value areas from yesterday's session, right? So the overnight, we went up to previous day's high. We're right around value area high. Just up to value area high on the NASDAQ, not up to the previous day's high. Above the previous day's high for the ES and back into value area high. And the same for the Dow, right? So there's really not too much on the table here. We'll look at in a second now. I think the NASDAQ is actually significant resistance. So until it pops over value area high, I would actually assume for the NASDAQ that this holds as a lid for now. So right around this, 11,936, and we could actually just have some balance. And I titled my video the Friday late PM weekend hedge. So as we get into the last 20 to 45 minutes of the session, uh, basically about 20 minutes before the bell rings, there will be probably a little bit of an outsized move one way or another. My advice is, don't be in the market at that time unless you're sitting there basically flipping a coin to see which way that people are going to hedge with limited risk, right? If you want to, try to risk, flip a coin, try to make one to risk one to make 10 or something like that. If you want to risk 2 or 3 points to try to make, 20 or 30 points, as more of a lotto ticket play, that's always on the table. And then we'll see. Other than that, I would recommend if you've been in something all day long that's been working for you, you really need to be out of that position well before like 10 after 3 p.m. Eastern time. So let's look at those levels. So here is that area that I'm looking at again. That 11,927 is where it's marked up on this chart, but that was clearly support, resistance, support, resistance. So do we get a pop above it or not? With it being Friday, it's anyone's guess really, but that's a level that you're really watching. Above there, you get to basically 12,000 even plus or minus 10 points. And as you look at that, so there's a little bit of a zone there, and then there's really nothing up to about 12,090, 91. And then getting back down leads you into that 11,727 area of the chart that we were consolidating for quite a while. So let's move off of there. Let's go ahead and look at the Dow next. This is the index I play the least with and mess around with the most because for those that aren't aware of it, the Dow only has 30 stocks. They continuously rebalance, screw with this thing to keep it up. 3 of the stocks were swapped out on August 31st. They rebalance it. They change the divisor, the way it's calculated. This is probably the most bullshit index that there is, in my opinion. So as we but it can trade technical for sure. So as we look at these support and resistance areas, we have, basically this whole area from 28,000, 600 up to 29,071 that really we're looking at, and we're just still holding this, right? And we're still holding the vaccine spike up, right? That's what this is right here, and that's going to be at the base of this, right around that 28,595 area. So holding above there is really a line in the sand, and you can see, back here on the chart from all the way back to October 12th through October 19th, right? These highs, that should be support as well as we come down a little bit more for the Dow. So keeping this, back and forth, and nothing's really changing, right? So you're still leaning bullish above these levels. It doesn't mean it's going to be bullish today. And I almost titled this video "Trendless Days," right? Because I think we're in the time where you get a day that trends up, you get the next day trends down, you get the next day trends up, and we can get 2 days this way, a day that way, but we're not having any directional, and I don't think there's going to be any real directional move for any of these markets that lasts. We have already had it, right, from the Friday before the election until now, right? When we come down here, that was the move. So it's the markets always move, consolidate, normally pull back a smidgen, and then go back into trend. That's what it's been going on for the last basically 11 years. It's going on 12 years now. So, move, consolidate, pull back a smidgen, and go back into trend. So there's no reason to believe that at this point that is going to stop. I think there's a lot of new money coming in the market that's chasing prices higher. We got a lot of FOMO, and you've got a lot of things with the market that the market, is only one way. And let's face it, if a company doesn't go into bankruptcy, right, they're likely to trade higher, over time than they are right now. I would like to point out a fact that out of the S&P 500 stocks that were in the S&P 500 20 years ago, half of those stocks are no longer with us, right? The S&P 500 is still there. So I had a question yesterday about, what I think for long-term investing. Uh, it really, if you got 30 years or more, you can try to play some common stocks. I would do that with no more than 25% of your money. I would actually, if you want to buy equities, I would do the ETFs. I would do the SPY, the QQQ, the IWM, the DAI. I would do those, the diamonds, and you will get the dividends with those as well, right? So dollar cost average into those on pullbacks, we usually get, basically 2 to 3 decent little pullbacks every year. So there's that, and then try to stay away. Stocks like Netflix. Netflix is unlikely to be still standing, 20 years from now. It'll either go bankrupt or be absorbed by another company, and so are a lot of the other high flying Fangman stocks or Hangman stocks, whatever the acronym is today. Those stocks are likely, the majority of those, not to be here in 20 years either. So keep that in mind as you're playing them. If you're playing it with a larger money in retirement, you're swinging them, it's very difficult later to exit those stocks when it's the end of their days, right? People were trading Yahoo forever, right? And then they rode it all the way down. So don't be in that camp with your retirement money. So looking at the Russell after giving that little speech, we still have the same thing. That it looks like the Dow, right? It's a lot cleaner for the Russell, right at 1690. We've got this coming up, and it's been holding that support, right? And it's still holding that vaccine spike, and it's the same pattern that the I'm going to go ahead and actually add this level in that the Dow has, and the Russell is much cleaner, right? We're probably going to get right in to this area, which would be 1641.5. It's going to be difficult for that to get through that later, and if it does, that's going to be more than likely some decent resistance. I'm going to go ahead and actually change the color on that one. So looking back, so where is this going for today? I really don't think that the Russell is going to get, below this. I don't think it's really going to get above, 1747. Something's going to happen until we see all four of the indexes below these vaccine spikes, and we already do have that on the NASDAQ, right? We'll go ahead and look at that real quick since we got a little extra time today. Right, you almost can't even see that on here because the NASDAQ actually went down when those were going up, right? You had a rotation of capital immediately when that happened. And looking at the ES, you can see, this is basically the level of that is 35.50, 53, right around there. That's basically, we've traded under it and back above. And that same area of the chart going back to October, the beginning of October, that's really, it's this support from these highs, from that, move up previously. You move down, you always go back to the previous high, and that's just basically basic support resistance theory, and that's really what's holding this market up right now as well. And I just don't think that, again, that you're going to be able to take out the weekly lows at this point yet. So I don't look for anything dramatic, and we're not looking at anything dramatic, remember, on the level 4s today, right? At the most, we're looking at getting down to 34.28. So really, again, what I'm looking for today is more than likely we're going to retest a lot of the value area. We'll probably have a little bit of an inside day, and then late in the day we will end up more than likely getting a 20 to 40 point move in that last 25 to 40 minutes of the market that'll be basically directional one way or the other, right? And it could just whipsaw, down and then back up as well, right? You can almost get a V bottom that just takes it out, and it could take out a lot of today's trading action, whether it's long or short, but really not take out the high or the low of the day, right? Still close within the range, still close within the session. More than likely, it's not going to be making, an underwater close or a salmon run close. So I hope this helps. If you guys have any questions, throw them out to me in Discord, either in the equity profiles, and I'll be monitoring the trade room chat as well. I hope this helps. You guys have a good day, and look for some two-sided tape today, as we've been having.